Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. You already know what to do. I'm not going to ask you, but those of you that's been following me, hit that like button right now, okay? But if you're new, you already just follow the prompter below. We got a lot to cover. S&P, NASDAQ, and Dow were all up this morning. They were up hugely in the pre-markets, and then it began to sell off. In Money Moves, I discussed that with everybody that's following me in the morning. I make my daily post there and get you guys ready in the morning. And that's unfortunately, what happened, right? So we had this run up in the pre-markets, ran up, sell off, right? Then we had a slight recovery and then floor drop. And now it's trying to recover in the last hour. We'll see what happens. Even still, we'll take it today with the NASDAQ up 170 points at the time of filming this and the S&P up 60 points, okay? But let's look at Big Tech. Big Tech was due to really pump, and it actually showed some signs of pumping. I got Nvidia, Apple, and then I got Palantir down there too, right? Just a little, some growth in there, low cap growth. But we could see same deal. Yo-yo down, tried to recover and cool off. Why? Larry, we were supposed to have a good pump today in tech, and especially with the tariffs, the exceptions in some tariffs, meaning phones, iPhones, not just iPhones, but cell phones, chips, computers, those type of deals. Let's listen for a minute, and I'm going to show you guys how mixed messaging is coming from the White House, and then we're going to invoke China.
Yes, there's a lot to unpack here, David. So the tariff exemptions that the White House had repeatedly vowed would not be coming, of course, showed up this weekend. A handful of consumer goods, mostly technology, as you guys said, and as you can see on your screen here, all now exempt from the 125% so-called reciprocal tariff on imports from China. They are, though, still subject to the 20% tariff imposed over fentanyl concerns earlier in the term. But administration officials have spent 2 days now essentially saying not to read too much into these exemptions. Here's Kevin Hassett talking to reporters this morning.
Pretty much everything's going to be covered. The question is which law applies. And so if it's something that has a national security effect on things, so if we buy it from some other country, then we might be unprepared in time of war. If they were to turn off that thing, then that's going to be in a 232 bucket. But then we've got the reciprocal bucket, which is kind of most everything else.
So Hassett and other officials are doing a few things here. They are first trying to knock down any criticism that the president is backing down in his tariff fight by carving out these items. They're also highlighting that 20% tariff still applies, and they are emphasizing that more tariffs on these goods may still be coming. Remember, guys, we've talked about this, but certain goods were always excluded from the reciprocal tariffs. Copper, lumber, semiconductors, and pharmaceuticals all on that list because the White House has long been looking at imposing national security tariffs under what's known as Section 232 on those items. Phones and computers were not initially on that list, but a White House official just this morning told me that they could now be lumped into the semiconductor investigation because phones and computers, of course, are downstream users of chips.
So there's a lot of confusion anywhere you look. I listen to Fox Business, Yahoo, I listen to the BBC, I listen to CNBC, and one thing is for certain. For those of you that's going to say, yeah, that's CNBC, they're all confused. There is no straight thing coming out, and the markets are reacting erratically, and that's why the markets are being whipsawed left and right. So now let's see what China is responding.
There's a lot going on here. You guys were talking about those tariff exemptions. The Chinese government, on the whole, over the weekend, had acknowledged that the tariff exemptions were what they described as a small step, and even said that China was evaluating the impact. The state media, though, had said that this was a U.S. retreat, and also more evidence that the Chinese supply chain is really important for the world. Today.
So that's what it's about now. The president of China don't want to seem weak to his country and to the rest of the world, like he came to the White House kowtowing down or bowing down. And America don't want to look like it's bowing down. Meanwhile, things are getting ugly. The bond market is wrecked. And you just look, a home mortgage now is over 7%, and there's things happening that are not good. 401ks are just wreak, the market has been wreaking havoc on the 401ks and the stock market, our equities, right? And so I just want you to continue listening.
Probably because of a lot of the confusion of the messaging from the White House, the Chinese government doubled down on their overall stance. That is, that the U.S. government should abolish the tariffs and what they describe as wrongful actions.
Strong comment. Abolish the tariffs, okay? Abolish it. And that's what we knew was going to happen coming from China. We knew this, all right, good people? This is all a dog and pony show, right? And so someone needs to pick up the phone and talk off the record so one don't think the other one, so they can both come out looking strong. Either way it goes, they're both going to come out and they're both going to claim victory.
What was also interesting is that a state TV-linked social media account, which is now closely watched for messaging on U.S.-China trade, just several hours ago elaborated a little bit further, saying that to the Trump team, what they call delusion is China will compromise under high tariffs. The account goes on saying if the U.S. really wants to talk, China needs to see real action. They noted that Walt Disney and Comcast, which owns CNBC, have development and production businesses, theme parks, and consumer goods in China. They also mentioned Sony, Paramount Global, as well as Netflix. The messaging, though, overall, outside of that, and the potential for countermeasures, is that there needs to be a lot of support for Chinese exporters, and that this is paramount. Carl, you mentioned President Xi's visit to Vietnam. He is there in Southeast Asia on a three-nation tour, ostensibly to try to build up those trade ties. Today, he announced, or China and Vietnam announced, that they had signed several trade negotiation deals. And then, of course, there is the private sector that is also getting involved to try to help redirect some of the goods that the exporters used to sell, and I guess so still do sell to the United States as well as elsewhere, but also to sell them here in China.
So now China's looking elsewhere for a partner, and so is America. America now, you got Tesla that actually is looking for India. And I'm sorry, not Tesla, but Apple looking to India now. So Apple is now manufacturing 1 out of 5 iPhones in India. Okay, so President Xi is looking for they're looking to Putin, and they're looking to other countries to do trades with, and manufacturing, and we're looking elsewhere too. Again, Apple is now manufacturing 1 out of 5 iPhones in India. Okay, and that's like it's gonna go from 40% up to 60% of iPhones. So they're ramping up so that they could have 60% of their productions in India and then the rest here, okay? So you got NVIDIA is going to invest $500 billion in the U.S. over the next 4 years, right? Followed by Taiwan. And Taiwan Semi is going to invest $100 billion, and Apple $500 billion in the U.S. So some things are working, all right, which are going to take time. So I don't want you guys to think I'm totally against tariffs. Some things are working, but the fact of the matter is there's blood in the street, and that's you and my blood, right, with our money. Okay, and so I just like to keep it real. What I want to talk about actually is, where do we buy? Where do we buy? Now, I'm going to ask you this, and I want you to look me in the lens and tell me the truth. When the news first broke over the weekend that they were going to not do tariffs on, laptops, phones, chips, etc., did you think to yourself, man, missed it again? And if you did, anything I say is not a suggestion for you to buy, hold, or sell. My question to you is, what are you going to do when the market comes back down? What are you going to do when it comes back down? Because some of you, I'm talking to you right now, in the last 8 days, in the last 8 trading days, let's say the last 5 trading days, you haven't bought anything. And am I getting on your case for not buying anything? No, because if we go into a verified a recession, then that could be bad. You could start to lose. But if we don't, it's going to be hard for you to catch the bounce. The market keeps showing you what it wants to do. The market wants to go up. Okay. So now I want you to listen to this clip.
I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah. And I think part of it is if someone had an investor hat on, not tactical hat, you know, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there. And the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
Let's just take a look. Let's test what he's saying, right? So let's go to the VIX. All right. And I'm going to pull up 5 days on the VIX, which is the volatility index. And we could see it right there. So let's test what Mr. Lee is saying. So on the 10th, you see that. That was April 10th. It spiked above 50. Remember, you could start buying dollar cost averaging in above 45. So when it gets above 45, when it gets in the 45 range, you can start to buy, right? Right here. It's where you can start to buy. But when it spikes, he said you're pretty okay to start buying, which I agree with. So at the bottom, let's just compare this to the S&P 500, right? So clearly you could see that from the beginning of this year till today, he was absolutely right. So the yellow was the S&P 500, and that's the day the VIX spiked. You guys see that, right? And you see that dip in the S&P 500. What's the S&P 500? 500 of companies, American publicly traded companies that are closely watched, are in the S&P 500. You guys see that, right? I mean, you can do that with anything. You can do it with the Russell. You can do it with a lot of stock. Okay, let's just look at an individual stock. Let's look at NVIDIA. Let's look at Tesla. TSLA. Same deal. You see that dip? So it dipped and the VIX spike. Let's look at NVIDIA. This is the point I want to make. NVDA. I'm trying to reach across the room and type with my left hand. Same here. You see that dip, the yellow, the dip, but you see the VIX spiked up. So what he was saying was correct. And if you look at the SPY, remember that was the 10th of April. So if we look here, the 10th of April right here, that would have been this day. And so what he's saying, this is the 200-day moving average. He's saying this would have been the day on the 10th to actually buy. Now, this being a red candle, here's where it opens here and it closed here. So somewhere during that day, you could have bought and you would be okay. And that doesn't mean that tomorrow won't be a red day. It just meant that you will be okay if you just buy and hold in that range. That's my lesson, good people. I believe it gives you another opportunity to look at your portfolios stock by stock, ETF by ETF, sector by sector, and not having all of your money in one sector, and see if you're well diversified. And if there's no ETFs, I believe that now's the time to start adding on these dips, right? Add to the positions or the sectors that you are weak in. And this is what's called rebalancing. Okay, so that's what we want to do because the market actually wants to go up. Even if you go back to 2020, I believe it was October 2022 lows, you can still see that even though we're low right now, the market still wants to go up. GDP keeps growing, okay? Companies keep making more earnings, okay? And long as the P over E, price to earnings, as long as the price for the earnings remain at a fair value, meaning the lower the number, the better, then the market actually continually wants to go up year over year. And so that's why when you see I have the like the S&P 500 up, that's why even if you stack the S&P and the NASDAQ up, if you go over the last 5 years, you're just going to see a straight line up. Even with, look at that, 2023 dip, 2022 dip. So even though, and a lot of people have asked, the reason I'm showing this, a lot of people said, well, Larry, well, if it dipped that low in 2022, why would I buy now? Because in 2022, you see this low in 2022, you're still up, you see? And so that's why time in the market outperforms timing the market. And so I'm not telling you to go all in. I'm telling you that I am buying the dips, but I'm not selling the rips because I'm buying long-term positions. And I'm just going to continue to add, especially to my ETFs, because I wanted more money in my ETFs. So I buy more on these dips. Okay, good people. Hopefully this has been helpful to you. I never want to just get on here and just play a lot of videos, blah, 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 blah. And you don't understand what's going on, or just, just report what just happened. But I also try to point you in the direction of financial independence and generational wealth. Okay, good people? But if you're like me, you don't learn well with a lot of technicals and a lot of big words. You want somebody to talk to. I always say, talk to me like I'm 3. And so that's what we're doing with Money Moves, okay, with this new options class. Now, our next lesson will be on Teachable Tuesdays, which is tomorrow. This will be the only link below, because a lot of you have joined up and you've been watching the classes and learning. And some of you said some of the stuff that you learned even already, we only got 3 classes up, that you are learning the stuff that you missed, okay? These classes are up and loaded and they never go away. For those of you that wonder, it's not live. I'm actually making the classes so you will have a clear understanding for beginners, absolute beginners in options, and so we can kill it later, right? I'm going to leave it right there. Hey, I made it through with these sinus headaches, good people. I try to smile through it in spite of. You know, the worst is the onset of spring and the onset of winter, or should I say the onset of fall. But this too shall pass. I love you guys. We'll see you tomorrow. Live, love, laugh, and learn.